Aloha, my friend. This is day 2 of me being in a hotel room in Orlando, Florida, attending this business convention while I'm still maintaining my cash secured put option positions. You see, because in 2023, which is when I'm recording this, I believe if you have an internet connection, which obviously I have right now, a bank account, which might not be obvious to you, but trust me, I have one. And if you spend money at least once a year, and I do spend money at least once a year, then I and you have no legitimate reason not to be selling cash secured put options on stocks you'd be happy to own. You see, one of the great things about the strategy is that you can cash flow the stock market to achieve financial freedom without spending a lot of time in front of a screen. So you can do the things you love instead while you're working to achieve your financial goals. Now, sometimes you might not be doing the things you love instead, but maybe the things that you choose so you can do the things that you love later. For example, I don't necessarily love being at this convention, although it's nothing wrong with it. I'm happy to be here, la-da-da-da. But, talking about what I love to be doing. So I can still be working and making money in the stock market. You can do that too by learning how to do this. We're going to look at these positions I have. Now, keep in mind, these are not stock recommendations. I personally don't know if I would really, if I was using real money, not simulated money, not paper trading account, I don't know if I would use these particular stocks. In fact, I never have. I don't really have much interest in them. But we're looking at selling cash secured put options on these 12 different sectors if something looks good. Why? Not because I recommend that you should sell cash secured put options on these equities, but this just gives us an easy reference point. Just as a learning tool, I recommend that you learn how to select your own with some of these downloads and using this playlist. And if you feel like it, you can go into the paid stuff. So that's a quick disclaimer. Keep in mind, investing, trading is risky. If you are not emotionally an adult, then you probably should not be doing this. You need to be mentally and emotionally, not just physically an adult. You need to be mentally and emotionally an adult. And if you wear a shirt that says "I hate adulting" or "I don't feel like adulting today," then probably investing and trading is not for you. You want to have your emotional maturity be at minimum at least your age or more. So please keep that in mind. So right now we got open positions on XLF, which is a financial ETF, and XLI, which is an industrial ETF. If you watch, I will put a link to a video right here at the 3-minute and 30-second mark. 3 minutes and 30 seconds. You don't have to watch it right now. Boom, there it is. 3 minutes and 30 seconds. That link will show you the difference of basically in liquidity between XLF and XLI to give you a better idea of how to select certain stocks that will be good for you. You can see the XLF is a lot more liquid, and so right now we do have this open position on XLI. Each position closes in 3 days, right? 3 days left to expiration. We have 2 contracts here, 1 contract here. Our strike price is 30 here. Our strike price is 94 here. That means that on or before April 14th, we could be assigned 100 shares per contract. So 200 shares here, 100 shares here for XLF at $30 or XLI at $94 per share. And right over here, probability of in the money, looks like there's not even a 2% chance, statistically speaking, that this is going to happen. And on XLI, there's a little over a 7% chance. These are pretty low probabilities. So what we're going to do today is we're going to attempt to sell another option on XLF closer to the money, which means right now XLF is trading about 32, 34, roughly around there. right? The further we go away from this number, 32, 34, like for example, 30, right? That's about $2.34 away. But let's look at selling a put option at 31, which is $1 closer to the money. Let's see what that would look like. So we go over here to trade. Well, I want to do the same expiration just for learning and training purposes. Here's this is called option chain. We see the strike prices. Strike price means the stock can go down down to these numbers or up to these numbers. This is showing you these different contracts you can sell at these. So right here is the 31, and we see that as it closed, you could sell for 3 cents times 100 because there's 100 shares per contract. You could bring in $3 gross, or you might be able to bring in $5 gross. And the delta is 9, which in this case, we're looking at the delta to have a rough estimate of the probability of this expiring in the money or out of the money. And so this, by looking at delta, we have roughly about a 9% chance that this would actually expire in the money. So that means a 91% chance that it's going to expire worthless. We see that there's already been over 10,000 shares contracts traded on this, and today alone about 550 some. And the highest it traded for today was 5 cents. Lowest it traded for was 3 cents. Let's see if we can sell a contract and get filled at 4 cents. So I'm going to click on the bid side. Even if I clicked on the ask side, I could adjust it. Like for example, I know which side to click because we always sell looking at the lower number. So for example, if I click this one, it's going to show up green. Now I could just change this +1 down to -1, and that means I'm going to sell 1, right? Or if normally, so I don't have to do that, I just click this side and it automatically pulls up sell -1. And I'll switch this over to, heck, let's just put it at 5 to see if we get filled. We're gonna switch this to good to cancel. Basically because after the market closes, I want this order still to be open so we can look at it tomorrow. There's different information in here. I'm not going to go over all this information, but it's showing you all this different information about it. But what I am going to do is I'm going to change this over here. I have this set up in a way where I can put these different trades under certain things. And for example, right here, I'm going to put it under open orders because that's what it is. I'll send that into the market. Now under here, under the monitor page, there it is under open orders. All right, and if it gets filled tomorrow, then I will right click here, and then it'll give me this option, move to group, and I'll move it to the same group to be over here. But now, since it's not open, the position's not open, see, it doesn't give me that option. So that's where it's going to stay. It's going to stay right there. Now let's take a quick look at the XLF chart. All right, here's a quick snapshot view of it. This is 1 month, 1 day. Let's look a little closer though. Let's look over here at XLF. Okay, right now we're looking at 1 year, 1 day. Let's move it over to 1 month. 6 months. So we're at 6 months, 1 day, and give me 1 second. I put a 200-day moving average on here just to have a quick look. What I can also do, I don't look at all these at one time. I have each one set up for various reasons. Sometimes I change them around, but I don't like looking at charts like this all the time. This has a bunch of moving averages on it. I just kind of like to take a quick look, but I also like that clean look of not having as much things on it. But quickly looking at this, we see basically it's over the 9-day and the 20-day moving average, and let's quickly look at this cone of probability. We're looking at selling the 31 strike, and it's gonna expire. What was our expiration date? The 14th. So down here in the bottom, you see the dates, and over here you see the prices. So on the bottom, I'm on the 14th, and I see that 31, statistically speaking, it's outside of the cone of probability. Doesn't mean it can't go down there, but the way, just a little bit of a reference. Something else that's good to reference is this right here, which is the volume profile. It shows you where the mass amount of volume takes place. So for example, right in here, we see there's a lot of transactions taking place right in here. And where is that? It's like between 32, it's like closer to 32. So 31 is down here. So maybe we wouldn't be surprised if it pulls back kind of down into this area, but it would really, really have to sell off to come all the way down there. And I don't need to look at all of these for, for what I'm doing right now. It just sort of depends on what the situation is. And let's go back over here. Look at the 6 months on a 1-day chart. And volume kind of bumped up, so we're going to sell one right here, and let's put one in at 31.50. As we get closer, we are increasing the chance that we'll get assigned, and that's kind of what I'm doing, just for training purposes, looking to see, hey, if we get assigned, what are we going to do? So let's see here. So we got the bid being 7 cents, ask being 10, last close at 9. We see a delta of 17, which is telling us roughly, a little less than 20% chance that we'll get assigned. Lots of contracts. You notice this number and this number is higher than this number and this number. The 31 is more liquid, but this is still pretty liquid. The highest it traded for today was 11 cents and lowest at 6 cents. Let's just let's go for, take a look at that chart one more time. Let's just go right in whatever the mid is, 31.50. We'll go right in the mid. See if we can get filled for 8 cents. Just to give us a greater chance of getting filled, and that way if we take ownership, if we get assigned, then we can write some covered calls. So in my regular trading account, my live money trading account, I'm a lot more selective. I probably wouldn't be selling all the stuff. I'm doing this a little more just for to see what's going to happen, so I got something to make a video on, right? If I were to really trade all this stuff the way that I trade my own account, then it would be a lot slower. So I figured, let's just speed it up a little bit. Let's see what happens. Got everything expiring in 3 days. These two over here expiring in 3 days, just to speed up the process. Now, there's different things that we could do if we wanted to get more money, right? Because you might be thinking, you're not making a whole lot of money. There might be some things that we could do, which there probably is, but this is less about like, let me brag to you how much money I can make so I can impress you on this fancy car I bought. No, it's to show you the dynamics. And tell you what, the people that are going to stick around, they don't really give it. Maybe they want the fancy car, but what they want is the skill. If you're sticking around for this stuff, you really want the skill. So you can buy a car, you can do whatever. You don't want me impressing you with a car. If you're really going to be learning from me, you're probably not that type of person, right? You're probably a person that wants skill, because I'm that type of person. So I imagine people like myself are going to gravitate to me, people that want skill. So anyways, we'll wrap it up right there at the 3-minute and 30 mark. Remember, you can go back and watch that video, a link to that video that will show you some liquidity difference between XLF and XLI, and what the pluses and minuses. I think I go over some of the pluses and minuses of having the liquidity differences. But with that, my friends, I got a variety of stuff to do. Even though this computer here shows that it's 3:17 p.m., that's Hawaiian Standard Time, I'm at now 9:17 Eastern Standard Time. So it's time for your good buddy Brent to do some other stuff. Aloha.